Did you know that the battle for technology supremacy between the U.S. and China is already affecting the price of your smartphone, the future of AI, and even global job markets? What started as trade tensions has now escalated into a full-blown tech war, one that could reshape the entire global economy. From billion-dollar chip bans to China's shocking AI breakthroughs, this war is about more than just politics. It's about who controls the future of innovation. And trust me, the stakes are higher than ever. So, what's really going on? How did we get here? And most importantly, how does this impact you? Stick around, because by the end of this video, you'll have a crystal clear understanding of why this battle matters and where it's heading. Let's dive in. Segment 1. The genesis of the tech war. To understand how we got here, let's rewind a bit. The U.S. China tech tensions didn't just appear out of nowhere. They've been brewing for years. It all started with concerns over intellectual property theft, national security, and economic dominance. By 2017, the U.S. began taking serious action, imposing tariffs and placing restrictions on Chinese companies, particularly in the tech sector. One of the biggest targets was Huawei, China's telecom giant, which was accused of posing a national security threat. These early measures marked the beginning of what will become a full-blown economic conflict. Over the past few years, the U.S. has systematically tightened its grip, blocking China's access to critical technology like semiconductors and artificial intelligence. As a result, China has suffered nearly $150 billion in lost exports to the U.S., reshaping global trade flows. But this isn't just hurting China. American companies are feeling the ripple effects, too. Apple, Tesla, and even smaller tech firms have all been caught in the crossfire, struggling with disrupted supply chains and increased costs. Segment 2. The Semiconductor Showdown. If there's one industry that defines this entire tech war, it's semiconductors. These tiny chips power everything, from your smartphone and laptop to high-tech military systems and artificial intelligence. Without them, modern economies simply cannot function. And here's the shocking part. China is the world's largest consumer of semiconductors, spending over $300 billion annually to import them, more than they spend on oil. That's why the U.S. has gone straight for China's Achilles heel. Through a series of strict export controls, Washington has effectively cut off China from most advanced semiconductor technology, ensuring that Chinese firms can't get their hands on the high-performance chips needed for AI, 5G, and other cutting-edge innovations. Take Nvidia, for example, one of the leading AI chip makers in the world. The Biden administration has restricted Nvidia from selling its most advanced chips to China, fearing that these powerful processors could be used for military and surveillance purposes. This has put Chinese companies in a tough spot, forcing them to scramble for alternatives. Beijing has responded by investing billions into its domestic semiconductor industry. But here's the problem. China is still years behind the U.S. in chip design and manufacturing. Segment 3. The ripple effect on global markets. When two of the world's largest economies go head-to-head, the entire world feels the impact. Recently, the intensifying tech war has shaken global markets, causing major downturns, especially in Asia. Investors are panicking, and businesses that rely on Chinese manufacturing or American tech are scrambling to adapt. Nvidia, a company that has seen explosive growth thanks to the AI boom, has been hit hard. With potential U.S. restrictions on selling its top-tier chips to China, Nvidia's stock has experienced sharp fluctuations. Investors are worried that losing access to the Chinese market, one of its biggest revenue sources, could slow down its rapid expansion. And it's not just Nvidia. Companies like Apple, Qualcomm, and Intel are all facing uncertainty. Many American tech giants rely on China for both supply chains and sales. If tensions continue to escalate, we could see billions of dollars in revenue losses, delayed product launches, and even job cuts in the U.S. tech sector. Meanwhile, countries like South Korea, Taiwan, and Japan, key players in the semiconductor supply chain, are caught in the middle. They rely on both U.S. technology and Chinese manufacturing, making it nearly impossible to pick a side. The result? A complex and volatile global economy where no one is truly safe from the consequences of this ongoing battle. Segment 4. China's countermeasures and innovations. But China's not sitting idle. If the U.S. wants to cut off its access to critical technology, China is determined to build its own. Beijing is pouring hundreds of billions of dollars into its domestic semiconductor and AI industries, hoping to break free from reliance on American technology. Take DeepSeek, for example. This Chinese AI startup is proving that China doesn't need to invent brand new technology to compete. It just needs to optimize what already exists. DeepSeek is leveraging well-established engineering methods to create cost-efficient AI models that, in some cases, are already comparable to those produced by top U.S. companies like OpenAI and Google. This is a perfect example of China's ability to scale innovation at an unprecedented speed, turning affordability into a competitive advantage. But it's not just AI. Huawei, the Chinese telecom giant that was nearly crippled by U.S. sanctions a few years ago, has made a stunning comeback. In 2023, Huawei shocked the world by releasing a 5G smartphone powered by a domestically produced chip, proving that despite U.S. restrictions, China is finding ways to move forward. The company is now doubling down on research and development, focusing on self-sufficiency in chip manufacturing and software. The bigger picture here is that China is shifting from being a technology importer to becoming a technology creator. And while it's still years behind in cutting-edge semiconductor production, Beijing's massive investments could eventually challenge Silicon Valley's global dominance. If China succeeds, it won't just impact U.S. tech companies. It could reshape the entire landscape of global innovation. Segment 5. The Global Economic Impact. This tech war isn't just about the U.S. and China. It's forcing the entire world to pick a side, and that's causing massive disruptions in the global economy. For decades, China was known as the world's manufacturing hub, supplying everything from iPhones to high-end electronics. But now, as U.S. restrictions make it harder for American companies to do business with China, many manufacturers are looking for alternatives. Countries like Mexico, Taiwan, Vietnam, and India are stepping up, eager to replace China's role in the global supply chain. Take Mexico, for instance. The U.S. is now importing more goods from Mexico than from China, something that hasn't happened in over 2 decades. Companies like Tesla and Apple are investing billions into new manufacturing plants in Mexico to avoid trade restrictions and high tariffs on Chinese imports. Meanwhile, Taiwan and South Korea, which are home to some of the world's top semiconductor companies, are being forced to navigate a dangerous middle ground, balancing relationships with both the U.S. and China. But here's the problem. While this shift may reduce reliance on China, it also creates massive uncertainty in global markets. Companies are scrambling to rework their supply chains, leading to increased costs, slower production, and higher prices for consumers. Experts warn that if this decoupling continues, we could see a fragmented global economy by 2035, where different regions rely on entirely separate technology ecosystems. That means fewer options, less competition, and potentially slower technological progress. Segment 6. What this means for you. So, why should you care? Because this tech war isn't just happening in boardrooms and government meetings. It's going to impact your daily life in ways you might not even realize. First, let's talk about prices. As companies struggle with supply chain disruptions and shifting production away from China, the cost of electronics could rise significantly. The next time you upgrade your smartphone, laptop, or gaming console, you might notice a higher price tag, or even delays in getting new models to market. Then there's the impact on innovation. If the world splits into 2 separate tech ecosystems, one led by the U.S., the other by China, companies will have to design products for 2 completely different markets. That could mean slower technological progress, compatibility issues, and even a future where American and Chinese technology don't work together at all. Imagine a world where an American-made app doesn't function on a Chinese smartphone, or where AI systems in different countries evolve in completely separate directions. And let's not forget jobs. The U.S. tech industry thrives on global collaboration. If this war continues, it could put thousands of American jobs at risk as companies struggle to adapt to shifting trade policies and new manufacturing realities. This isn't just a battle for technological dominance. It's a fight that will determine the future of the global economy. And as tensions escalate, we're all going to feel the effects. Closing remarks. Understanding the U.S.-China tech war is crucial. It's not just about policies or profits, but how tech shapes our lives. If you found this helpful, comment, and subscribe for more in-depth analysis. What do you think? Is this tech war necessary or a recipe for disaster? Thanks for watching.